Okay, afternoon guys. Let's get the show up and running. Packed day today. This afternoon is going to be busy. Plenty of pretty important data for us to go on. Let's just wanted to have a look at the 1 hour chart to start with, and what I've got here is the high of the year last Wednesday and then what's happened since then. And of course, you know, we've had that 3 down days in a row followed by Monday's pretty strong rally on, you know, light volumes and, you know, not much economic data. And actually, if you look at yesterday's market action on this graph, you know, it actually looks fairly quiet. You know, the range from yesterday was not very big at all. It was only, we had a low at 1053.25, we had a high at 1065, so only just over 10 points yesterday. And you know, we had that obvious spike higher and then the obvious spike lower off the back of the data releases that we got yesterday. The Case-Shiller housing index showing an improving situation in the US housing market, which kind of counterbalances the slightly worse than expected data we had last week on the housing front. That's why we got the bid up to the high of the day. We broke through the 1064 level, which was set, that was the high on the 24th of September, and we moved up to 1065.75 as the high of the day. From there, we completely reversed that whole move due to the worse than expected consumer confidence numbers. And you know, the market looked pretty weak there for a time. It was a very big, rapid move lower. We went from the highs of the days and we smashed through the low of the day. But ultimately, now looking at this chart, you know, you've got to say that this is quite a bullish sign for the markets, I think. You know, that was quite bad data yesterday. The consumer confidence number did miss expectations by quite a portion. That data release has been unpredictable in the last few months. It hasn't been like other data releases where we've seen a steadily increasing trend. The consumer confidence number has been up and down, and actually the high of the year was back in May. So you know, you've got to add that into the equation, the fact that that data release can be a little bit volatile. But the markets seem to have digested that bad consumer confidence number, and you know, we're very much trading within the range we were trading in prior to yesterday's economic data. What I'm looking at here, and what's quite a key level now, is this 61.8% Fibonacci retracement level. That's using the high of the year last Wednesday and the low on Monday. And this level has proved pretty stubborn. It halted the upside on Monday's rally. We found resistance throughout Monday night and Tuesday morning at that level. If you take out yesterday's spike higher and spike lower due to the data, we've actually found resistance at this Fibonacci level 5 times now. So this fib level is proving to be very stubborn, and it's certainly our first, you know, main upside resistance here going into today's session. Of course, further up we got the high from yesterday at 1065.75, and then of course our main upside target is the high of the year at 1075.75. What have we got on the schedule for today? First of all, first thing to say, it's quarter end, okay? End of Q3 today, so it's the last trading session of the quarter. What tends to happen at quarter end is volumes definitely do pick up. Okay, you've got longer term investors tidying up their books, and you can quite often see a little spike in volume. So I'm expecting some, you know, a high volume day, especially as we've got some pretty decent data to go with it. Okay, so make sure you're aware of your volume. And be aware of the large volume going through the market and how that can change the market movements. So that's first thing, quarter end. Now, on the data front, firstly at 1:15 we've got the ADP employment report, and this is the first, you know, this is the warm up really for Friday's non-farm payrolls. And you know what we're looking at, I mean, last time out it came in at 298,000. In August, and this was the smallest job loss since November last year. Okay, and with economic recovery really starting, ADP payrolls should fall by less again in September, so we're looking for a further improving trend on this data, and we've got a consensus forecast of -195. So we're looking for further improvement in the labour market. This is not as important, well, it's nowhere near as important as Friday's non-farm payrolls, but it does give the market a little indication as to what might happen on Friday. So that's at 1:15. At 1:30 we've got US GDP, but bear in mind this is the third and final estimate for Q2 GDP. Okay, because it's the third and final, normally means we don't get too much revision from what it was. So we're looking at minus 1.2% as our forecast. So I can't see it being too far away from that because it's the third and final reading. And also, you know, Q2, it's 3 months ago now. I think the markets are going to be much more interested in Q3 data rather than looking back to Q2 now. So I don't see this as being hugely important, but obviously we need to pay attention to it. So that's at 1:30. 3 o'clock we've got Chicago PMI. We've got an expected forecast here of 52. So we'll preview that in full beforehand. So that data's at 3 o'clock. 3:30 we've got the oil inventory levels, and the oil market's been pretty bullish this morning. We're trading 67.82 at the moment. So definitely a bounce back after really the last few sessions have been pretty weak for the oil market. So oil inventories at 3:30 will be important. Actually, there's a correction. Sorry, Chicago PMI is not at 3 o'clock. It's at 2:45. Okay, Chicago PMI at 2:45. So plenty of data, guys, for us to go on. To the upside, we first got to get through this fib level at 1060.50. Then we're looking at the high from yesterday, and if the data's really good, then, you know, as I said yesterday, we're in range of the high of the year, but it's going to have to be a pretty special set of data to get us up there, but it's certainly in range. On the downside, really we're looking at the lows from yesterday at 1053.25 as our kind of first up main resistance, and then we're looking at 1049, which was quite an important level the early part of this week. So if we get back below there, we're very much back into the sort of range we were seeing on Monday's session. So that's what we're looking at for the downside, but just be careful with the pickup in volume, guys, and hope you have a good day. Thanks a lot.